You've probably seen the news of jobs moving from one place to another, but did you realize that $1 trillion has gone with it? In today's video, we're going to break that down. We're going to look at what's happening in the economy, and I'm going to tell you what some others have been doing. All of that and more. Let's begin. Here we have the situation where New York and California each lost $1 trillion when financial firms moved south. For the first time, hard data shows the scope of the upheaval. And that's what I want to break down for you right here. My name is David Quinteri, and what I do here at this channel is take all this complicated stuff, make it real easy. I show you what's happening in the stock market. I look at what's happening in the economy, and I'm simply trying to break this down at a level that everybody can understand. And then I tell you what some people are starting to do as a result of all this information. Let's begin with this, showing us very clearly that it started off slow, but now it has been speeding up recently. For the first time, there are hard numbers quantifying the exact scope of the exodus. Both states have, in the past 3 years, lost firms that manage close to $1 trillion of assets. You're looking at what they're saying here, corporate filings for more than 17,000 firms at the end of 2019. So they're collecting all this data, putting it together, $1 trillion in each spot. It's not a small number, even for New York and California. These are big economies, certainly. But you can't stop where this exodus starts happening. There's a reason for it, right? Why has this been happening? Is it a fluke? Is it just because of what happened during 2020? Well, there are certainly a few reasons for it. The exodus from the Northeast and the West Coast has meant that the loss of thousands of high-paying jobs, straining city and state finances by sapping tax revenue. So, of course, what they're trying to do now is create new taxes, new ways to tax people so that they can get some additional revenue back. And you're looking at the direction, it's pretty clear. I mean, we all knew this anyway, but leaving California, Texas is the top destination for investment firms. And you look at 158 companies managing nearly $1 trillion in assets moved their headquarters out of New York. 104 firms shifted to Florida, 56 of them from New York. I covered this during the last few years. We've been seeing it very clearly in this direction. Probably not a surprise. I didn't realize, however, $1 trillion has gone with it. So that was even a surprise to me. And so we look at this. When you do this, you're bringing the people, and potentially that talent comes with it, right? So you're bringing a lot of good people into new areas, and that attracts even more businesses in those areas because they start to say, oh, I would love that guy on my team. I would love that guy on my team. And certainly that area starts to change. It might take a while, but that's the way it goes. So this is front and center because we're watching it in real time. Hard to look at it in real time, but see what's happening here. We've got prices that have been rising in these areas. The real estate was already super expensive. So, of course, a lot of people were saying, you know what, I'd rather go to a place like Texas. I can get the home for half the cost. I can now work remotely. Oh, I'm going to go over here. And now the prices of areas like Miami and so on have gone up to levels that is record high, but also now unaffordable for there as well. So not everybody is, Jeff Bezos. They can buy a house in every state if they want. This is something that has started to come down and become an issue for a lot of people. And so the food prices were too high. You had so many restrictions in these areas. People didn't like the politics. I mean, there are lots of reasons, but ultimately it comes down to the finances. And when things are too expensive, when you don't like the circumstances around you, you simply move out. And that has happened here for both jobs as well as the money. Okay, here we go. The S&P downgrades multiple U.S. banks, citing tough operating conditions. So we do have the rising interest rates, which we will talk more about here, but you can see it for yourself. Looking at several banks being downgraded, we have seen others being downgraded. The Fitch, I believe it was recently, downgrading the U.S. There's a lot going on at this time, and we're facing it. We're right in the middle of it. And the honest truth here is that this is not going to be resolved while interest rates remain elevated. They are looking for interest rates to come down. But in this period of time, it becomes very difficult. So we have the circumstance of high interest rates, but these banks, they were buying all of these assets when interest rates were super low. They've got losses to deal with, and that's why they are starting to create what they call loan loss provisions. Loan loss provisions. That's money for a rainy day, knowing that there's a wave of defaults coming, and that will be the video I cover next. You'll have to stay tuned for that tomorrow. I'll be breaking that all down. It's not just in the United States or Europe, like it's everywhere. This is an issue, of course, and I'll cover that all. When we look at what the central banks are doing, know that it is generally going to flow all together. There are some changes, of course, but when you just kind of zoom out and give it a period over 10 years, you start to see that they generally act accordingly. One thing that they've been doing is, especially in the emerging markets, central bank gold demand in the first half of 2023 was the highest on record. They're buying a lot of gold. Oh, the US isn't. Canada definitely isn't. But a lot of countries are doing so. And part of this is because of the de-dollarization. We are aware of that. But we also do see that these countries would rather hold on to a little bit more gold now than US dollar. And they're always going to have reserves. So they're going to have US dollar reserves. There's no question about this. But instead of buying, let's just say, let's make up a number, $1 billion a month, maybe they're buying 800,000 a month of that US dollar, and they're buying 200 of the gold. Let's just say like that. And so they're trying to diversify out of just US dollar because they're starting to go into the new world, a new order, right? Things are changing. German central bank gold revaluation account underlines the soundness of the balance sheet. Interesting stuff whereby basically they're saying, look, we've taken a lot of losses recently because of the increase in interest rates, all these things that have happened. Oh, but we have a lot of gold, and that's done better over the last few years. Revaluing that puts us back in balance. Isn't that interesting? Central banks that can print an infinite amount of money, they could devalue their currency as much as they want, and they still value gold. Something real? Something real? Could it be? Fed's Williams says he sees restrictive rates for some time. Rate cuts may be warranted next year if inflation slows. And that's the expectation we have Jackson Hole. Jackson Hole is the #1 most important central banking event all year. And that is coming up. If you subscribe to the channel, of course, you'll get all the details of that. But what we have right now is coming up at the end of the month, and we're going to see potentially some details. No policy will be put in place or anything like that, but we will get some information back. And I believe the general assessment here is that they will not increase interest rates this time around. We'll have to see. For the ECB, though, they had hiked interest rates last time, combating inflation and leaving the door open to more. So we know that the issues of Europe are quite excessive when you look at some of these countries. Higher unemployment rates, they've got big problems with the banking sector, they've got inflation, they've got the issues, initially was energy, and now that has shifted somewhat to food prices, still extremely high. And you can't get around that. You can't just put another sweater on or another blanket on and turn down the heat. This is food. There's only so much you could do. That's why I talk about people, get to know your farmers, grow your own food. These are things that we should be doing. The ECB is trapped between Japan and the US. I think that Europe is in the worst position, actually, personally, based on my studies, based on everything that people I talk to. Europe is just in a terrible circumstance overall. There are some bright spots, but you can see the struggle that they're going through. I wish that they would create policies that would be beneficial to the people. Portugal has done some good things, but overall, just not wise. Okay. You need to have things that just make sense, but you don't. You see the action they put through, and it's just like, what do you do? Are you trying to crush the economy? And the answer, of course, is yes. But that brings us to this economy. The Eurozone economy is set for a painful reckoning. ECB rate hike will trim 4% from economic output. And so I don't necessarily think that increasing interest rates is a bad thing. We have to get rid of all that waste, what I call in my first book, economic detox. And so that's got to go away, but they don't let that happen. They don't shed all of the waste that just doesn't occur. So what does occur is people end up getting screwed over because the timeline is too short. It needs to remain elevated for a long period, and other policies need to be put in place. How many policies do we see where they're restricting development? So how are you supposed to get new and affordable housing on the market when you're putting these policies that are making it more difficult? You have to incentivize these things, but they're not doing that. And so when you see a city doing this, understand that rents will increase. Rents are going to increase and make it more difficult overall. We need lower interest rates to actually facilitate people to do these things and build and grow and so on. But the policies that are put there, the restrictions that are put there, end up just making it more profitable for them. And then in the end, the people don't get lower rents and better, better for their mortgages and so on. It just doesn't work like that. Long term, that's what I have seen. For those who believe that there may be a soft spot ahead, it's going to be manageable. It's going to be short. It's going to be shallow. And so they're not going to shed a bunch of workers. What are we talking about here? Oh, that's right. The recession. Just going to be a little blip. You don't need to worry about it. There's a huge debate, and I want to know what you think. Will there be a recession officially? Will they declare it? If there is a recession, is it going to be short? Is it going to be long? Is it going to be shallow or deep? There are many possibilities here, and that's what we're dealing with right now. We're still undergoing the discussion of whether it's ever going to happen. My goodness. All right. Much of the price pressures in the euro area were coming from the high energy costs. Recently, we've had the food prices. So the point is, we're dealing with this all over the world. Every place seems to be dealing with something, right? And you're probably asking yourself, what can I do? Well, there's different things. I talked about this a few minutes ago. If you're dealing with a food problem, what can you do? Well, of course, you can grow your own food. Secondarily, you can have relationships with your farmer. You can go to the farm and you could say, look, this is the circumstance. I would like this and that. And you can split with your family, with your friends, with your coworkers, with like-minded people, because that would give you a super low cost. And I know people that have taken half of an animal or whatever, and they go to the butcher, they bring it to the butcher does it all for them. They got the big freezer, they take care of that long term. Other people with gardens, they're able to actually keep that garden going even in the cold temperatures all year round. Okay, maybe you're not getting your all your food, but anything helps. What about this? This is just one example. Singapore workers are the world's fastest in adopting AI skills, according to LinkedIn. And so these people are adding their skills. They're saying Singapore, one of the best places in the world for the economy, the currency, safety, and so on. They're adding AI. They're saying, okay, AI is this new thing that all the companies are looking for. I'm going to take a course. Where can you learn about that? Well, I've talked about it before. I have videos about it. Class Central. Type into a search engine, Class Central, or you can type in, there's a video, but I have a short that talks about this. Class Central. Okay, so what are they doing? They're adding AI. Why? Because the jobs are going there. AI, automation, robotics. Learn about these things. Get certified if you can. If you are in a position that might be disrupted by these new technologies, add that to what you've got. If you want to know more about these things, if you want to be on top of everything, the number one place to be is my Discord. Discord, I'm going to be doing so many things, including doing giveaways of my books, giveaways of other things as well, hoping to figure out a way to do giveaways of cash. And basically, the way that it will work is you have to be on the Discord. It's free, of course. All you got to do, hit that link in the description below. Over 1,100 people on that Discord, and I want to see you there. I hope to see you there. Click that link. I'll see you.